Well, how's it going, everybody? Great to see you all. JT here on behalf of the Ethfinance and now the Ethereum community on Reddit. And thanks to the EV Mavericks once again for hosting yet another happy hour for this day, December 13th, 2024. Happy hour number 90. Give us a thumbs up, smash a bell, and most importantly, let's get a big hello from Megan Knab from Franklin what is it, Franklin? I keep saying it wrong. Franklin Payroll.
Franklin Payroll, yeah.
Awesome. It is so good to have you on the show. Finally, I think it's only taken us 90 episodes. Guys, you wouldn't believe how busy her calendar is. We kept pushing it back, starting around 60, week 60, came to week 61. We've been working really hard to get Megan here, and now she's with us. Thanks so much for joining today.
Oh my gosh, it's an honor. Thank you so much for having me.
Okay, cool. Well, before we dive in with Megan, the Weekly Doots live stream is all about showcasing the best of the week from the Ethfinance community on Reddit, soon to be on our Ethereum. This is a read-along reaction series, and if you want to follow along, head on over to dailydoots.com, designed and produced by our very own Hani Abu. Big thanks to Tricky Troll for capturing and curating each of these days' Doots, and the A word for curating this most beloved weekly list. Go ahead and subscribe to us on any podcast feeds that you belong to. You can also mint this episode at pods.media/EV Mavericks, of course, after the show is done. It's free to do so, and it's our own little way to give you an audio POAP. If you're watching my secondary window on Discord, make sure that you mute that window to avoid any echoes. And as always, if you know someone who wants a piece of this action, send them my way. Well, let's jump over to our opening tidbits here. Look at all these amazing guests that are coming down the pike. On January 3rd, we got Brian Smokovich from Pistachio Fi. This is a really cool one you don't want to miss. We got some guy named Justin Drake on Beam Chain coming on January 10th. And then January 17th, Kate from Blockcelerate. That's a guest brought to us by way of Logri the Bard. So we're going to learn all about Blockcelerate, Beam Chain, and Pistachio Fi over the coming weeks. For the last two podcasts of the year, we're probably going to take a little bit of a break and do an easy peasy show with no guests. We want to make sure everybody has a great holiday, but we will keep doing the Doots through the rest of the year. And as of January 1st, it looks like we're going to be heading over to our Ethereum. It looks like the people in Ethfinance have voted overwhelmingly. 95% approval rating so far. I mean, we could have done a simple majority of 50%, but we were holding the bar really high at 66%. I wanted it to be 80%, and now we're at 95%, at least above 90% anyway. So thanks for all the clear signal and the feedback. And last thing I'll mention about that is that we aim to keep that Ethfinance daily exactly the way it is. In fact, I want the word Ethfinance in the daily description on our Ethereum. We want that home to be the place where the Ethfinance and the EV Mavericks can come and bring some blood into the main subreddit to help out all the newcomers, as we've always been the best teachers on Reddit. All right, so let's go ahead and get into our rich list for this week. Sitting at number 10, Hani Abu at 98, Set One Less at 103, Ethical Trade at 106, Crypto Currency at 108, 696 ETH at 111, Harog at 131, Tricky Troll at 132, Benito 2030 at 154, Logri the Bard at 156, and Superfizz sitting at the top in the Ivory Tower at 218. Awesome. Great job. So, yeah, Megan, if you didn't know, that's the number of times that those people have earned a point for making it on the Daily Doots, which is basically like the top 10 of the previous dailies alpha content. So it's pretty cool to get on the chart at all. We are celebrating now 1,116 Dooters, last updated as of December 6, 2024. I'm going to refresh the page. Ooh, it's now been updated. We got 1,117 Dooters. Whoop, whoop. And that's been, as of today, Harog, he got a triple kill. He went up. He's at 138. I think everybody else, it looks like, yeah, Hani Abu still at 99. Okay, so everything looks good. Great job to all of the Dooters on the Doots leaderboard. Here comes our Trinity, the morning roundup. Day trader by H chimes in Ethereum, $3,917. And you got Trisomy 21 chiming in on the ratio going up 0.39. He didn't even have to bust out the calculator, look at ratio gang. A weekly haiku courtesy of JS Tears. In it together, staking in any weather, birds of a feather. How does he do it? JS Tears, how do you do it? Amazing. And of course, Clam Chota says, it's Chota time. ETH, take my energy. And our shit post of the week, because we always like to start with the best for first. User Chris Kind says 4K strikes back, Revenge of the 4K, 4K Reloaded, and 4K The Reckoning. So we've got the sequels coming out for hitting that $4,000 price action. And Chris Kind is a duder number 4, a relative newcomer to the rich list. Well, let's bring it back home and let's talk to Megan Knab about Franklin Payroll and everything that's going on there. Megan, thank you so much for joining the show.
Thank you for having me. It's like, I feel like I'm with a legend right now, JT. Thank you for including me.
Oh, man, you're giving me way too much credit. Megan and I have actually known each other for quite a few years, swimming around in the back channels of the internet. I'm really inspired by her. She's the CEO of Franklin, and I don't think this is even like your first company. Can you give us a little bit of history about where you started, and then, I mean, don't tell me like when you were born and all that stuff. We can fast forward we can go past when did you hear about first hear about Bitcoin? When did you make your first company?
Yeah, sure. Well, I was born in 1991 in Athens, Georgia. No, just kidding. No, I mean, I can't believe actually how long we've known each other, and it makes me feel like a crypto boomer. But I got into Ethereum around 2016, 2017. I started a company in 2018 called Veriledger. Ancient history at this point, but I'm an accountant by trade and have worked on Wall Street for a long time. And when I learned about Ethereum, I got super excited about the power for it to eliminate corporate greed and really leapfrog ahead of like all of these sort of like accounting technologies to create better accountability, more transparency in the corporate world. And, I think a lot of corporate America, people like shit on accountants, and also just like in pop culture, it's like, they're like boring or weird or like sitting in a back office. And accounting or Ethereum has really changed that narrative in a lot of ways, because to me, it's primarily an accounting tool. So started that up in 2018, operated it for a couple years, had a little exit from it. And then in 2022, started up Franklin, which is a hybrid cash and crypto payroll company. So I feel like I've known you, JT. You've seen kind of the like ups and downs from when I from when I first started getting into Ethereum.
Yeah, I mean, look at me. It's like I'm 27 years old. It's been that's what the cycles do. Yeah, I'm looking. I'm filling in the cracks with some putty after all the stress. Well, I'm going to ask you, like from an accounting perspective. Okay, so like you just said, accountants are sometimes viewed as like the back room kind of types that are just kind of running the sausage at the factory. Did you feel like Ethereum kind of made your line of work an art form for the first time? Did it make it more expressive? Did it make your tooling more exciting to work with?
Yeah, I mean, I think that anybody who's worked in accounting would not qualify it as an art form. Uh, but in a lot of ways, I think what's cool about it is that it sort of like shifts the power dynamics that exist between a business front office and a business back office. So, in like these large financial services firms, which is sort of like where I grew up in professionally, right? There is sort of like a hierarchy of like who's important. who is like annoying or like seemed, looked at as kind of like a kind of like bottleneck in the business.
Mm.
And I think that like the idea that accounting can be on chain, can be open source, can be accountable, has actually like really shifted that power dynamic between front office and back office.
So you get some
So I'm still pretty,
expressiveness there. Yeah, go ahead. Sorry.
yeah, I mean, I think like I was just gonna start like railing against like, the man, but like in the
Do it.
last like 6, 10 years, there have been so many cases of like pretty significant sort of like accounting fraud or accounting mismanagement that has a real impact when you zoom out on our economy, at least in the United States, like from a macro perspective. Big companies restating their financial statements, whistleblowers talking about sort of like unsavory like booking of entries, like all this like nitty gritty shit that people like, who haven't studied accounting or don't really care, like it does have an impact. And that's what I'm really excited about Ethereum. It's what first got me like super excited about it. And I'm still like operating in my like little niche over here in the payroll space. But I think like as, even just in the last like 3 years, seeing how Ethereum has penetrated the kind of mindsets of different people like at Ernst and Young, for example, Paul Brody, a good buddy of ours,
Good
right?
buddy.
Like his sort of like mentality of trying to bring more of these like sort of corporate infrastructures onto public chains. It's so exciting. We're right at the beginning of it, and like, yeah, I mean, who knows what's gonna happen, but it'll be really, really great to see.
So, on the subject of banks and institutions and like payroll, you guys kind of sit in between the person, the company, and the banks, right? So, do you feel like, and I like to read what Caitlin Long says about crypto and banking and whatnot. Do you feel like we are starting to move into an era where it's possible for the payroll community and developers like yourselves to have less friction and more ramps that you'll be able to interface with? Do you think that that's starting to open up or will open up in the future? What are the other bottlenecks or concerns that you have with growing your business?
Yeah, yeah. Well, let me like tell you a little bit about the payroll industry. It lives in the 1980s still.
Okay.
If you log into something like ADP or Paychex, these like big companies in the United States, it's like you're transported back in time 30 or 40 years. So, uh, for somebody who's actually at a company like operating payroll, like you're in the accounting department, you're a CFO of a small startup, it's kind of like a bizarre, weird, like duality that you live in. You're building a tech company, you're building a consulting company, you're thinking about the future and how technologies will change our world, and yet you're operating your business using this old ass infrastructure that is insufficient for the world that we live in today. Um, it's kind of exciting to me, like from a market perspective. We, like as a payroll company, you work with corporations, you work with end users too, like the workers who get paid, employees, contractors, that kind of thing. In the United States, too, so much of our economy flows through a paycheck.
Mm.
Uh, our taxes, our health care, our retirement benefits. If you get divorced, if you have child support payments, if you have like multiple jobs, all of the center point of all of that is really the paycheck. And depending on where you work, depending on who you work for, it's like an extremely complicated thing that sits under the hood of generating a paycheck.
Mm-hmm.
And so for me, being like a little bit more like crypto native than like probably 99% of the payroll industry, the idea of using stablecoins to facilitate payments as an alternative to our traditional financial system is like so exciting. There are so many complex payment arrangements that take place under the hood of a payroll system between that payroll software and a bank, and between you and your bank and receiving a direct deposit. And it's super inefficient. It's extremely expensive. It's also very costly if a company gets it wrong. Um, talking like criminal,
Yeah.
criminally liable if you like are not appropriately paying your workers. And so it is like to me as like, you know, sitting where I sit from my like narrow perspective as like an accountant who's interested in crypto, interested in digital assets, interested in public accounting and open source accounting, it just seems like an obvious place to inject digital assets, public chains to be able to solve a lot of these kinds of inefficiencies that exist.
So Megan Knapp from Franklin Payroll here. So I have you been presenting at traditional accounting and payroll types of conventions? What has the response been? Are those people starting to tap into you for consultation? Do you feel like there's a growing need to get ahead of a curve on this? Is there an appetite of bringing things on chain? What's your experience been within your industry?
Yeah, 100%. You know, I'll walk into like a payroll trade conference and be the youngest person there by like 30 years, which is really saying something because I'm in my mid 30s. So I'm like not that young. But there is certainly like a generational divide that is like we are at the precipice of it changing in the payroll industry. It is not a very diverse industry.
Yeah.
Um, and, you know, a lot of the times we find ourselves kind of being like the weird crypto kid in the corner. But I would say over the past like 2 years, like the sort of growth and upside of stablecoins has become so apparent that we are becoming like a little bit more popular. Like in the payroll industry, we sometimes now get invited to sit at the cool kids table, which is
You're
you know,
not
it's about time,
you're
honestly.
you're not the weird crypto kid with the unicorn t-shirt and flip-flops.
I mean, we're still that, but you know, it's becoming that kind of culture is becoming more interesting. Um, but yeah, you know, I think like there are a lot of these like massive companies, like the biggest payroll company in the US, for example, is a company called ADP. You know, they still have like mainframes that they're operating. Like they've been around for 80 years. For
Yeah.
them, like being able to adopt new technologies is not easy. And
Yeah.
you go through like a lot of bureaucratic infrastructure. You know, you know, you sit through meetings where you're reviewing a bunch of sort of like social policies before you even get to like the business of the day. I was in a business meeting with a large payroll company once where, you know, we spent the first 15 minutes doing like a land acknowledgement of, you know, where their headquarters was, that they had taken Native American land, and then reviewing everybody's pronouns. And
Mm.
that is interesting, right, to some extent. But when you're in a super competitive industry and you have a lot of inertia to not do something like that, you know, it's super inefficient. And so I think that a lot of these like larger companies that are handling billions of dollars on a monthly basis are looking at startups as a like solution, you know, and like, you know, acquisition target to figure out like, okay, this is how we can offer a better product. This is how we can stay up with the trends and you know, enrich our product base.
What are the odds that a company like ADP approaches you with a paycheck to buy you out and then never
Yeah.
embraces it? You know, like
Oh, I
hang
mean,
on to that nugget, you know, because I think you're onto something. And sooner or
uh,
later, it's going to break out. I just feel it.
totally. You know, you know, like it's not like exciting. We have had like a number of acquisition offers from these larger companies. And for me, as the leader of this company, it's, you know, it's a story that has happened to so many tech firms where you get bought by a bigger fish and then the product totally dies. You're not able to integrate it, whatever. Like this technology is too powerful for
Mm,
it to not be brought to the market. And that's like really our mission.
I love it.
Um, you know,
It's
see
inspiring.
how
Do
it goes.
you service anybody outside the United States, or is this just a U.S. based thing, or where is your business right now?
Yeah, we do. We work with some companies that are outside of the United States. Our bread and butter really is the US based companies because we have the tax engines to be able to support that. But for companies that are looking to do international remittances using stable coins, like that's a nice, easy use case for us.
Mm.
And certainly something that we see like gaining popularity. So there are a lot of countries out there, like jurisdictions out there that I think people talk about a lot when we talk about like updating remittance infrastructure, like in South America, Argentina, Colombia, areas of Asia, all that kind of stuff. So it's really exciting. If we were to look at Ethereum or blockchains from maybe like a Web 2 perspective, it certainly seems that stablecoins have hit the point of finding product market fit, and
Yeah.
that's really with international remittances so far.
Yeah. That is so true. I can't remember the stat, but it was something like in 2023, the total volume of stablecoin transactions around the world was something like over $10 trillion. Somebody in the chat could fact check me on that. But just that, money in, money out, and just being passed around, over $10 trillion were moved. That's data that could not be, that's like on-chain verifiable kind of data, that.
Yeah. And it's exciting, like as an entrepreneur building in the stablecoin space, seeing things like Stripe acquiring Bridge, which is a stablecoin infrastructure provider, Visa doing a lot of things with stablecoins, JP Morgan doing internal settlements with stablecoins. And I
PayPal.
think for us as a community, like the EVM community, we just have to remember like this technology should not be subject to corporate capture, right? Which, whatever, I'm running a small corporation, right? But a lot of this, the data is open source. It is like a very powerful mission where anybody in the world, as long as they have the technological know-how and sort of connectivity, can opt into this financial system in a way that you can't to like traditional banking. Like that's something that, as like builders in this space, we really have to remember to keep at the forefront of our minds.
Yeah, and I'm curious how a bank with custodial services and stablecoins being involved would just make everything so smooth and quick for all of the reasons that you're mentioning. Just the velocity, the speed, the settlement times, the 24/7 kind of ebb and flow. You don't have to wait till midnight for it to show up in your account. It can be, I don't know, it just removes a lot of friction. It's going to be really exciting to see everything unfold. And is there, okay, so Frank, tell me again when Franklin went live. Franklin's been live for 3 years, 4 years?
So we incorporated the company in 2022.
22.
Our platform's been live for almost 2 years now.
Okay. Very cool. And yeah, and if there's anybody on YouTube or in Discord that has any questions, you can either unmute or type it in the chat before we move on to the dudes. So I want to make sure that we get your answers to your questions if you have any. So Megan,
Sure.
what's next for Franklin?
Yeah, I mean, for us, like we've done so we launched our payroll platform, so multi-currency batch processing, all of the sort of like bells and whistles that you would expect from a TradFi payroll platform in the US, like benefits integration, 401k integration. You can have tax advantage Bitcoin and ETH into your retirement accounts through Franklin, which is pretty cool.
Certified financial planners plugged into you as well.
We have like retirement programs that are integrated into Franklin. So really more of like the forward thinking like Web3 companies that are our customers have taken advantage of that. So there are companies that like want to be able to compensate their teams in crypto native assets, and then you have that sort of tax benefit of it being in a retirement account. That's something that's super attractive to them.
Yeah.
For us, I think we think about a number of things. We think about how can we streamline financial operations further. So we released bill pay, we released invoicing, those kinds of things. Similar mission, you can do them in a hybrid way, cash and crypto. We released off-ramping, so you can fund your payroll runs in stable coins and have it be paid out in USD. That's also something that's been attractive, where if you're accepting venture capital investment dollars in USDC or you're taking in revenue in USDC, you can really put those assets to work better on your balance sheet by paying people, by paying bills, things like that, all in a tax compliant manner. When we look at the next year, I think we look at two things. One is how can we serve a broader market? So, thinking about expanding our sort of like tax engine outside of the United States. And then also, how do we enrich the like upside of people who use Franklin? So that means employees who get paid through Franklin from their employer. What additional benefits could we be providing their employers to pass on to them that are like super attractive?
Mm.
um, what kind of like more interesting kind of like incentive compensation schemes can we also be offering that are more like Web3 native? Those are all the things that we are thinking about this year for next year.
So, Megan, how many employees do you have, and are you currently hiring? Who are you looking for to join your team?
Sorry, JT, I had a little coughing fit. Can you repeat that question?
How many employees do you have, and like, are you looking for anybody? What roles do you need filled? This would be a good time to let
Yeah,
people know.
yeah. So we're a small team. We're based out of New York, which is like where I reside. We are hiring for engineers, so primarily back end type like skill sets, have familiarity with Solidity, are like kind of like well versed in like crypto technology. And then also looking for go to market, so BD and marketing. So we're gonna be like making a bunch of hires in January. Send me a DM on Discord if you're interested, or LinkedIn or Twitter. Would love to chat with you guys. So we're really, to be like as a founder, right? We in 2024, like we grew over 1,000%.
Oh,
We
wow.
really like proved our sort of like thesis
That's
with our
exciting.
product. It's super exciting. And in 2025, we're all about scaling and really like starting to play with like the big boys in the financial services industry and still being that weird kind of like crypto kid. But, ending up being, like bringing this kind of like really powerful technology to the masses, while still like holding true to like, our EVM kind of like ethos, of like open source, open finance, while staying tax compliant.
Uh,
So anybody that's interested in that would love to chat with you. We need help. We
Very,
need help.
very good. Yeah. And if you need somebody to help with some little tutorial videos, even if it's like internal based stuff or just customer facing how to's, let me know. I'd love to be a spokesperson. I think I saw Logri the Bard unmuting himself down there. What's up, Logri?
A
Yay.
bunch of stuff to talk about. So specifically on the payment side, we've had Ryan Berkman on before talking about three cities, and he was talking about the how how identity spans chain, right? That an address is no longer, the equivalence of a person, right? You have to specify a chain, and you have basically someone willing to pay in one asset and someone to receive another asset, and the transmission from A to B can involve a swap and a bridge, and there's this larger intention that you need actually a lot of machinery underneath that to fulfill well. So that's one part of payments is just like the act of transmission, and that can involve things like swapping and bridging, right? Another part of that is invoicing, and a third part is reporting, right? And invoicing, we've seen what people try this in 2017 with Request Network, and I don't know if that was just an execution failure, if they were too soon, if it was regulatory problems at the time. But I guess I'd say like it sounds like you definitely have an invoicing system inside of what you've built. You must, right? And then you must have a reporting system inside of what you've built, and you must have a transmission inside of what you've built, and you've kind of packaged those together into a larger product, right? Is that, and then do you have it's also plus what off ramps or on ramp and off ramps in crypto, or what else is in your product that's not those three things?
Yeah, I think so the one thing that's like you didn't mention, which is like an interesting way to break this down, is like the tax compliance side of things. So payroll is there are a lot of like crypto companies out there request included that say they do payroll, but they have no sort of concept of the tax obligations and liabilities that exist when you make those kinds of payments. And all of that is like native into Franklin. So one example of this is like there are certain states that explicitly prohibit crypto as a form of payment for W-2 wages. And it's actually interesting if you trace back this history, it goes back to like Appalachia in the 1800s, where coal mining companies would compensate their
In company
workers
script. Yeah, yeah. That's hilarious. So they said you
in
have to pay them in dollars, and that prohibits
exactly.
stablecoins. Got it. That's hilarious. Yeah.
Precisely. So, right, if you're living in a state that's like around Appalachia, chances are you actually legally can't be paid in crypto as part of your salary because of those kinds of laws. So that's something that we really care about. That's something that my like history as an accountant and like running payroll for many years before starting Franklin, like that sits at the front of your mind.
Mm.
Certainly. And to like a comment you made before, there are like a lot of invoicing products out there. And to me, like we built it, we have it as part of our platform. Our core business is really running payroll. And if you want to be paying vendors or invoicing customers in crypto, we also have those tools, but it's just sort of, we want to provide a great user experience to our customers so they can use us for all of their different on-chain operations. If you're not running payroll, you want to be doing like one or two invoices, like maybe you should look at Request Network. Or there are others out there. When I think about like that space specifically, that is sort of like outside of the tax compliant, like tax consideration context that you have to have, is like, what is the moat? Like, what is interesting about it? Moving stablecoins from A to B, it's kind of commoditized, right? Do you have like a nice like website sitting on top of a Gnosis multisig that makes it a little bit easier for you to send transactions? That's cool. Like it's not that interesting to me. And so for us, like these more sort of like complex financial operations that have a lot of like importance in the real world of like, hey, I need to file taxes next year. I need to have a W-2. How the hell do I classify the crypto I got as compensation? Like that's really where Franklin's like bread and butter, our value add like sits.
So
Um,
recapping that a bit. So in addition to the three that I mentioned, you have something like tax withholding, and that requires an interface with various governments. So it's kind of like an RWA style integration or bridge, right? That says, okay, you're getting paid, and now we need to start interacting with an entity that's off chain in a way that makes this compliant and legal, right? And so that in the same way that you'd have to have an RWA type of integration to do a mortgage or to do a treasury bill or whatever, right? There are these off-chain institutions, and you've written an interface that connects the blockchain to them so that you can live your life and basically get paid without going to jail.
I mean, that's like a really interesting way to describe it. I have never really thought of it that way, but I guess it makes sense in that way. I think like what the nuance is there is like what is off chain and what is on chain and like where does that kind of exist, right? There's like no way for any government agency that I'm aware of right now to just consume on chain data, right? So we have to pull that info, standardize it, add Web2 context, like your federal EIN number, like your
Mm-hmm.
company name, like somebody's social security number, right? And then send that to whatever local, state, federal agency that we're interacting with. So is that an RWA?
I
Probably not.
kind
Like I think we're probably
I,
a long way away from that. And some state websites could use a lot of updating and help with
Yeah, so
just
so
like
you have to be
interacting in the Web
compliant
2 world,
in
right?
at least 50 states, right? And so there's going to be a big legal apparatus to solving basically that polymorphism, right? That
Mhm.
the form that you have to supply for each of the states, every state's going to have their website for filing the state taxes, right? And then if you want to go international, you multiply that problem even more, right? Things like address fields start to look very funky when you get out of the US compared to the somewhat standard that we have, right? So that is quite a lift on the legal side to try and do what you're doing compared to Request Network, which is probably why they never tried to do it, right? But that's clearly a moat, as you said. That's clearly a value add if you're willing and able to tackle that challenge.
Yeah, and I think
Congratulations.
that the other thing to note there, Logos, is like, it is like a kind of like solved problem in the Web 2 space. And so it's not like rocket science, right? We just need to marry the Web 2 kind of like connectivity to the Web 3 primitives and like advantages
I
of
wouldn't say
like
it's
digital
rocket
assets and
science, but they would like the people that have solved that would like that to be a trade secret. They would like to have
yeah,
that
100%.
knowledge retained within their company. They don't want it leaking to you. So you have to attract the talent that has that know-how,
I
and you
completely.
have to and rebuild an internal org that has a better culture than these kind of dinosaurs that are want to stay in the 80s and don't want to move because all risk is, like actual risk of them going to jail, right? Any small
Yeah.
change they make, they say, what's the reward function, right? And they're not rewarded for trying to get out of the 80s, right? They're rewarded for keeping it running without any issue ever. And any change that you're going to make in those systems is going to be a risk. But if we want to overhaul the world for the better, we have to be able to support change. And so it's up to someone like you to try and disrupt an incumbent by bringing a better technology stack, right?
Yeah, I mean
Um,
that I really vibe with that, and I could like double click into all of this. But one example of that I might like offer is in the United States, there are like two tax calculators that all payroll companies use, like 99% of payroll companies use, and they're owned by these massive like other payroll incumbents.
Hmm.
And so it's weird, like payroll companies have to pay this massive premium to purchase their database that, by the way, sucks. You have to download it via like CSV, right? Like one
Jeez.
of them just released an API this summer and like, wow. But like in reality, tax code, like income tax and unemployment tax information, all this stuff is open source. The problem is that it's decentralized, right? Like it comes in unstructured data. There are over 1,000 data sources that you have to pull from. And being able to like pull, standardize, calculate that data, that's kind of cool. And like maybe it should be open sourced. And like maybe that's something that we're working on. So yeah,
no,
I feel
no,
like
no
you're
spoilers, right?
yeah.
Hey,
Maybe we're working on it, but until we release it, we're totally, project codename Elrond or something, right?
Yeah,
Um,
exactly.
uh, okay, so what is obviously you're growing by leaps and bounds. As JT plugged, this community sometimes does education outreach and onboarding materials. We did so for like Rocket Pool. So that's one way we might be able to help and integrate. Another thing I'd say is there's payroll adjacent type things like Opolis offers, which is basically like an HR org in a box, right?
Yep.
So that if you're an independent worker,
mhm.
that you can have the benefit of an HR org without having to learn all of that stuff.
Mhm.
Um, is that something that you would partner with someone to try and bring in? Do you just consider it not part of your solution? Is that something you'd be interested in expanding to eventually?
Yeah, I
Um,
mean, I think the work that Opolis does is amazing. They've been around for longer than we have. They have a different approach. They work with a lot of freelancers. We mostly focus on like the corporate side of it. So like you're a startup, maybe you're employing a contractor who then decides to pay themselves through Opolis. Right. There are ways to like kind of partner with these different organizations depending on how you want to like work with your team. One thing that we've noticed is that a lot of DAOs like to work with Opolis because they want to have these more kind of like freelancer friendly type organizations, where you have contributors, maybe you don't have employees, right? That's a great solution there. Franklin does have like HR tooling as well that's really geared towards the corporation. And then it's for them to use as they see fit. One of the simple things that we released like in our V0 that was like one of the more popular things that we did was just being able to marry a Web 2 profile, like somebody's name, with their address.
Mhm.
For so long, organizations, when they're paying out people, it's up to one person to manage a spreadsheet where they have somebody's name and their wallet address, and like
Yeah.
hopefully the spreadsheet doesn't get corrupted or
yeah,
something like
that wouldn't get leaked or corrupted or what could go wrong, right?
Well, we've had so many instances. For an example, CoinShift, I think like a year and a half ago, they had this system where you upload a CSV to their system and then you press a button and in your multi-sig, and then it gets paid out to all the recipients on that spreadsheet. What happened? Somebody injected some malicious lines into the spreadsheet and then hid them. So whatever the poor soul was who is uploading the document didn't realize there were some like hidden lines, and then they
Brilliant.
drained a treasury. Right? That
Brilliant.
cannot happen with Franklin. And it's one of the things that we like, because I used to do this, right? Like I used to be the person pressing a button from a multi-sig to pay out a ton of people, and it causes a ton of anxiety.
Yeah.
You're in this position of like checking, like, is the wallet address
Yeah,
correct?
let's
Like,
let's look at the transaction prediction on that. Oh, it's 10,000 lines.
yeah. And so that kind of ability to have certainty that you're paying an employee profile like you would to their bank account, right? Like in a regular payroll system, their bank account information is tied to their profile. We do the same thing with wallet addresses. And this idea of identity that you mentioned before, like one person can have multiple wallet addresses. JT's probably got 500. I don't know.
At
You can
least
like,
two.
right, you don't have to.
Yeah, JT's sibling the F out of all the airdrops,
They all have the same password.
So I think, it's really bringing forward this like Web 2 UX experience with like Web 3 native primitives. That's what we're excited about. And thank you so much for all your thoughtful like questions and commentary,
No, this
because
is great.
this
Thanks
is
for
like
coming
really
on.
what I'm all about.
Definitely.
What last questions I'd say is, so we're going through hopefully a renaissance and a change of regulatory headwinds to regulatory tailwinds in the next cycle, right? You see the social media is very abuzz with all the political appointments and the incoming administration. Are there any changes that you would hope that administration would make in order to make your company more successful, in order to ease the adoption of the solution that you're offering? What would you hope from this administration, or what regulatory headwinds could disappear that would make crypto take off and hit that viral spark?
Yeah. I mean, well, what I would say to this is like, I have been operating in the Web3 space through Democratic and Republican administrations. And one of the great things about being in the United States is that it has the most sophisticated capital markets, infrastructure, and market in the world. A lot of companies are afraid of operating here because of, you know, perceived like regulatory like lack of clarity. Um, it certainly depends on what you're doing. I think for us in particular, like we will navigate whatever political regulatory headwinds there are because of the space that we've chosen to operate in. So payroll companies have like a very specific treatment under US financial regulation, financial rules, and we operate within those rules, and we will always operate within those rules. Um, is the like new administration good for crypto vibes? Like perhaps. I don't have like a crystal ball where I will predict
Well, I'm
or
I'm
even
not
like
asking you
really.
to weigh in on like whether you like the new administration or not, or whether you think
Mhm.
yeah, I'm just asking if you had a wish list, if you could talk to your new
Yeah.
administration and you could say, here's what you could do for me. Do you have anything that comes to mind in terms of this is the point of regulatory uncertainty? Like we really need USDC to be a bearer asset. We need something like stablecoins to be encoded in law. We really need, better bankruptcy proceedings that are gonna handle this in a way that's not just a general creditor. We really need, this is the point of regulatory uncertainty that is causing us and the people, our customers, the most friction, the biggest legal question. What would you, if you could talk to the new administration and give them a short wish list? Do you have anything on that?
Well, not really. And the reason that I say that is because like regulators in the US at least, like their job is to ask a lot of questions. When I was working just in plain old like equities, like I worked at a broker dealer, right? We worked with FINRA, we worked with SIPA, we worked with the SEC, SIPC, like all of these guys, like, and it changes every administration. They just ask a lot of questions. What is problematic, is like when regulators start to like regulate in the gray areas of law. And so, one of the things, certainly like Hester Peirce, who's like a favorite of the crypto industry, an SEC commissioner, has said is the SEC needs to operate their business more transparently and in public. So you have a founder who gets an SEC like a letter, which means that their company is going to be investigated. A lot of times, what
Yeah.
happens after that is these backroom dealings, right? That's not good for anybody in the industry to not know what's discussed. And really, it's almost like a shakedown that happens sometimes, right? The SEC.
FTX. Sorry.
Well, FTX is interesting because there were criminal
Also,
like
FTX was most of FTX was not in the U.S., right? That was an overseas entity. So it's
yeah.
and that's the irony of a lot of what the SEC is doing, right? Is that
Yeah.
the more they
Pushing
crack down on
companies
U.S.
offshore.
entities, the people are still going to be seeking opportunities, the opportunity for crowdsourcing funding, early stage access to investment opportunities. That desire
Mhm.
isn't going to go away. So if it's not
Yeah.
available in the U.S. because of regulatory enforcement, right, actions, it's just going to push people outside of the SEC's ability to protect investors. So it's
Yeah.
actually
Right.
driving
Yeah, I
people
mean,
into higher risk, and it's actually hurting investors to
well,
do that, which is
100%.
100% counter to their mission statement. They're actually
Yeah, I
undermining
mean,
their own, not just their own authority, not just their own credibility. They're undermining their own mission if their goal was to actually protect investors, because the desire to have access to early stage opportunities and the crowdsource funding is never going to go away.
yeah, I mean, I think even like if we just zoom out and look outside of the crypto industry, right? The accreditation rules, right? This is obviously like leaves out a large part of the market who is not uninformed, right? And so there were some rules that took place, I think maybe 3 years ago, that said, okay, if you work at a broker dealer, you have specialized knowledge in equities, you can actually be an accredited investor. You don't have to meet the minimum, very, very high income thresholds. So yeah, I mean, I think that's true. Like there's some like low-hanging fruits that like if I were running economic policy for the United States, like if that's the hat that we're putting on here, I would say
When?
when, yeah. Dominance of the US dollar is actually like a national security thing, right? Stable coins that are pegged to the US dollar, USDC, USDT even, right? Like these are enhancing the dominance of the US economy globally. Like we should embrace that rather than fight it. And yeah, maybe there's some areas of tension that need to be kind of like figured out between like issuance and monetary supply. Like I'm down with that. Um, like I think like there are real issues in our like governance structure in Congress where you have people like who are elected that are clearly insider trading off of insider information that are not held accountable because it's a free market and they're
Well,
allowed
they
to
set the
participate.
laws,
But
so of
like,
course, held accountable by
yeah.
what, right? They decide what accountability means, right?
Yeah. I mean, there's so many things to double click on here. I think, generally like there's some like regulatory premium you have to accept as an entrepreneur in the United States. Like this is the most sophisticated capital markets infrastructure you're gonna get like looked at eventually, and you should be operating your company to such a standard that like that is actually something that's welcome and that can be an educational experience for regulator rather than something that you're afraid that's going to land you in jail. Like Franklin has never gotten anything. Like maybe one day we will, and like I welcome that opportunity to be able to talk more about like how we comply with U.S. regulations, but we just are using digital assets in some instances, and that's perfectly fine.
Megan, I'm going to call it now. Within 10 years, you'll testify in front of Congress.
Well, hopefully EVM Mavericks will be tuned into it. So.
I'm not even joking. You're such a leader in your own industry that you're the 1%. Just it's not the 1% they expected, and I continue to hope that nothing but the best for Franklin. And I'll say this to you. I don't know. Correct me if I'm wrong, but you probably get tired of people in the crypto industry or abroad that are looking at you as a woman and they're saying as a woman, it's like, no, you've been building companies since most of these crypto degens were in diapers, and you're a real freaking force of nature out there. And I'm
Don't
glad
call
you're
her
finding
old, JT. That's not nice.
I'm so like happy for you that you really found your lane, and just keep leaning into it. And yeah, just keep us updated. We want to talk to you again.
Is there
Oh my
anything
gosh,
that
thank you so much
comes
for
to mind
letting
for
me
you
be here.
that the EV Mavericks could do to help? Like I said, I think education onboarding comes to mind for me, but other than saying, "Hey, here's some visibility," let's talk. I tried to find something with each of the guests that we could get involved in and build bridges.
Oh, yeah, awesome. No, it's so fun to like chat with you guys and stuff. So like I'm around and would love to chat more and like really appreciate this community. And like as we build companies and stuff like that, like we just, need to like remember the ethos and like what's actually important and transformative about this tech and like build with that at the forefront. So
Well,
um
my favor to ask you is we're gonna be apparently merging over to the Ethereum subreddit.
yeah,
So if you could come in the month of January and post once a week or something, and just
no
help to
problem.
set a new cultural stage there, right? I'm gonna ask that of everyone that I think has a lot of influence or has a lot of knowledge in this space, is to come by and just help us set a new culture there to, make Ethereum great again.
Yeah, it's a merge. It's a make Ethereum Reddit genuinely excellent. That's what I've been
Fair
putting
enough.
on the t-shirts
So
and the bumper
if you
stickers.
if you can find 15 minutes a week, come by and post and just engage.
Professor Strangelove in the chat says, I'm gonna post to the moon every day in the daily. Merge.
I accept that.
Yep. Okay, well, Megan, if you've got time to hang out with us for a little bit, we're going to move on to the Doots. And if you can't, just give us an Irish goodbye and we will bid you farewell. But we're going to jump right into the Doots. Unless you have something else you want to share, I do want to say that the website for Franklin Payroll is hellofranklin.co. And it looks like you guys just joined the Circle Alliance program, USDC stablecoin, all kinds of adventures there on the website. If you have a company or know a company that wants to move their payroll over to a Web3 native solution, or at least a Web2, Web3 hybrid solution, Megan is your gal.
Awesome. Yeah, no, I'll hang around. Thank you so much for having me, guys. I really appreciate the conversation and like let's chat more.
Awesome. Thank you. See, Nixo's in the audience today. Good to see you, Nixo. All right, here we go. dailydoots.com. Here we go. Fire it up if you want to read along. Otherwise, let's get started. User Bermanskates explains the beam chain to us. So Bermanskates, I'm going to say your name wrong, but Duder number 5. I think a lot of the skepticism might have been due to time constraints for the presentation. It was just 30 minutes to unpack a lot. I like to imagine the beam chain proposal as another Schelling point for Ethereum, where the community can get as excited for it as it was during the merge. It is an ambitious and accelerationist effort focused on a subset of the Ethereum roadmap. And yes, I am beam-pilled. But I would like to hear the drawbacks to it. There are 2 other talks where he explains the beam chain in more details here, and those links are available. They are worth watching if you're interested and miss them. If you prefer to read, I'll try to summarize them below. The TLDR, you are not bullish enough. In the DevCon presentation, there was a slide where it showed the transition from proof of work to proof of stake and now to zero knowledge. In other videos, Justin Drake, also going to be on the podcast in January, expands and says it should be more accurately called proof of stake plus plus. Seeing that it's still proof of stake, but it will also make use of snarks. And he argues we should. Number 1, snarkify it all in Ethereum from consensus to EVM. By snarkifying it, any entity which consumes the Ethereum chain can do it with extremely low resources by verifying a single proof and syncing to the tip of the chain. This would make sure we wouldn't have any further dependency on Infura and other centralizing forces. Number 2, enshrine the snarkification of Ethereum within itself. Well, WTF is that? There will be a ZK EVM precompile, where if you want to launch a ZK rollup, you'll only need a single line of code, and you won't need to worry about bugs nor governance to enact changes whenever the EVM changes. It'll be reflected immediately on the precompile after any changes to the EVM. Previously, we had execution sharding, which be limited to 64 up to 1024 shards, and each shard would have its own state and grow independently, asynchronously. Now, there will be synchronous programmable execution sharding. These programs can deploy as many EVMs as they want, which would further increase the horizontal scaling of layer 1. These shards can also increase gas limit arbitrarily high because validators that verify state transition functions within the EVM only need to verify the snark proofs. Synchronous programmable execution sharding allows Ethereum to be maximally simple and provide building blocks that people can build around however they like, commoditizing VM, or the virtual machine, which allows L2s to have custom sequencers, governance, and feed tokens, and any other infrastructure that they may want to experiment with. Now is the part I really didn't fully grasp. Justin mentions we can go further. We can boost programmability by not enshrining EVM itself, but enshrine a ZK EVM underneath it. Instead of a ZK EVM precompile, we have a ZK RISC V precompile. The EVM would be a RISC V program bytecode, which is interpreted in real time by the native VM of the RISC V. He also expands on the other items that will be treated under the Beam chain, but which might be well known to Ethfinance already, and the post goes on from there. We're going to have Justin Drake on the show January 10th, it looks like. January 10th, Justin is going to be here. So bring all your confusing questions to that show, and Lord help me, because that's going to be a big lift. All right. And let's see, moving on down, Logri the Bard gives us a brief history of crowdfunding on the blockchain. A brief history of crowdfunding on the blockchain. The OJ killer use case for blockchains once we got permissionless transactions solved was crowdfunding. There's just a lot of money globally that would like access to early stage opportunities and blockchains due to no KYC. Allow that money to access them, no matter how harebrained the scheme may be. The first manifestations of this back in 2015 were ICOs like Ethereum itself. Send us some BTC and we'll give you some Genesis tokens on our new chain. Shortly after this were on-chain ICOs like Bancor and Golem that were mega hits in that age. Don't forget EOS. God, I can't believe how many tokens I got. Anyway, again, send us some ETH and you get some Genesis tokens. Normally, at least in the US, this would be illegal under securities laws, but Ethereum got away with it under the guise that ETH is a new commodity because it doesn't give you a claim on revenue. But it was just a utility token used in the protocol. Once that precedent became set, everyone copycatted that answer to raise stupid amounts of money in what was clearly one of the most exciting periods to invest I've ever experienced. Obviously, most tokens shouldn't be air quote utility tokens, and this led to terrible UX for a lot of projects. But if you're wondering why this terrible UX caught on, avoiding securities laws is the answer. Thanks, Gary. Then the SEC started suing U.S. companies that tried this, so the trend dried up. It wasn't proven illegal, mind you. The SEC just created enough regulatory uncertainty and threat, so no one wanted to try it just to be the standard bearer in a 4-year lawsuit. Thanks, Ripple. Naturally, all the ETH that was given to these projects was then cashed out to fund the project or just to grift. And we were left holding the bag on a historically awful drawdown of ETH from $1,400 to $80. Anyone complaining about the ratio in the bear market this time around has either forgotten what it felt like or wasn't around in 2018. That was brutal. I digress, though. A few years later, necessity remains the mother of invention, and the need was still there to offer crowdfunding. So the ecosystem thought up a new mechanism for this. Rather than selling tokens, projects would just give tokens away in a massive inflationary bonanza. They would not only give tokens away to people just escrowing some ETH in a pool, they would give a lot of tokens away for people to LP their new tokens, so there was liquidity to sell into. This is probably worth reminding you at this point that no one is giving tokens away. This created liquidity pools that the token originator could then dump onto to raise money for their project. Also, it was very fun to dump some ETH and Yiffy or YAM pool zeros and see 1000% APR numbers stream at you in real time. We were crazy then. The bear market does weird things to you. You just had to be there for it to make sense. Well, how did this securities laws? Well, the token originator never let people directly invest in the project. All money raised by the project was through secondary sales on DEXs. Whomever bought the tokens didn't know they were buying it from the project, so there was no reasonable expectation that the sale was an investment in the project. Genius! Thank you, Ripple, for setting that precedent. Naturally, all of the tokens powering themselves using this inflationary model debased themselves down like 99% from the top. Investors got burned as devaluation of the token value was even higher than the ridiculous APR these pools promised. And eventually, everyone wisened up to the fact that inflation is not profit. So the trend dried up. So a few years pass, and once again, the demand for crowdfunding was never going to go away. And so the ecosystem thought up an even stupider way of accomplishing this. You see, VCs had invested a lot in the past 4 years during the vacuum of viable crowdfunding strategies, and they wanted a good way to cash out, but they couldn't have the company they invested in getting sued for securities violations by the SEC. So once again, they gave the token away. This time, though, they were going to airdrop it rather than make you farm it. No inflation. So people weren't scared of it, but nonetheless, retail were going to get dumped on by VCs. The VCs would recoup more than their initial investment, even if the project then died at this stage. So everyone was happy except some people who bought YT tokens, you degens, or bought the token that the VCs then dumped on. Most of these projects were so early stage, they barely had a functioning product. Looking at you, Eigen. Or were things like LRTs, where there isn't even a plan to build a project. And so what have we learned from all of this is that there is a demand for crowdfunding, and that isn't going away no matter what the SEC does. Projects are going to Kickstart, GoFundMe, launch meme coins, brazenly violate SEC desires, but base their company outside the U.S. legal reach, etc. And people are going to invest in those projects no matter how scammy the fundraising mechanism is, because that is just human nature. And the technology fundamentally enables it in an unstoppable way. Every attempt by the SEC to stop crowdfunding has just led to less honest mechanisms for doing so. It's actively hurting investors. Of all these approaches, ICOs were the most fundamentally honest, and I hope we bring them back. Banning ICOs does not stop crowdfunding. It just makes the mechanisms for it less honest and drives innovation overseas. That said, there are a variety of changes I would suggest for how we do ICOs to add better price discovery mechanisms that I'll write about in another post. Tricky Troll, you should write about the current landscape of grant and retroactive funding for non-token projects. Great job, Logri. Well done.
Thank you. Any commentary from Megan? Our guest.
Going
I think it's interesting defending ICOs. I think it's like interesting, like this idea that crowdfunding exists no matter what, and ICOs are actually like an okay vehicle for that.
I would definitely change how we do them, right? I would stage them in series. I would have something closer to a Dutch auction rather than a static price. I would add like KPIs and transparency, and when later funds will be released, they'd add governance over the release of the later stage tokens. There's things I would do to add accountability and to reduce grift.
I think there's like something here which is just like fundamentally like what makes the token valuable, and like is the token valuable because of its like crowdsourced funding method, or is it valuable because it actually like wraps the value of something into a more easily tradable way? And I don't know, you know, like that
I hope the
TBD.
token's valuable because it's ultimately represents some type of stake in underlying project of that has itself some value, right? So you go to something like
Well,
Wi-Fi and they
that
have
would
their
be,
baby program, they're doing buybacks, and the token should be valuable because it's backed by the revenue of Wi-Fi.
yeah, I
Um,
mean, it's like an equity, right?
yeah, so
That's just like my opinion as like a TradFi person, but I think
yeah,
it's
these
interesting.
these are basically equities, securities, or but a securities is a securities contract. It includes an investment in the project or the company, and we have structured things in a way to make them legally not securities contracts. But the most honest way of approaching this is still crowdfunding. We have a bunch of people creating a pool of money in order to build something or to fund the building of something, pay devs and whatnot, and they hope that that thing will have actual value and will generate returns and eventually come back and make the money. So I think most of the people investing in ICOs were hoping to make money not just on tulips, but that they were investing in something that would have lasting value. I mean, maybe not all the people, of course, but I remember in my day and age, I was hoping that like Request would become something big. I was hoping that like Amixigo would become something big. uh,
Funfair, oh my go.
Funfair would become something big. I got out of that one in profit, but anyway, um, I would change things to prevent the grift. But the fundamental idea that I just want to raise money for a project, so I'm going to sell you something that has a claim on the eventual money from that project seems more transparent, right? Seems more honest, seems less complicated than I'm going to stand up this like massive inflationary scheme where I'm going to collect a bunch of points and farm user engagement and then, dump early and often with my VCs, right? I'd rather just be more transparent and simpler and then add rules and add culture around preventing the grift.
Yeah, I
Excellent.
mean, would you say all those tokens should be like wrapped in like a Reg D offering or like Reg CF or something? That's what I would say there. Like, you know, there's some like reality that has to exist that meshes like Web 2 and
Yeah,
Web 3.
but the
And
SEC says come in and register, and it's like on the registration form is an address, and like what's the
yeah,
address of the token, right? They don't mean the chain address, right? So the registration rules for that need to be overhauled, or you go the complete opposite direction, which is, you know what? There are SEC certified securities, like there are organic certified fruits, and you can sell non-SEC certified securities. That's fine. You just can't sell them on SEC like policed brokers, right? So you can't list it on Fidelity until it is an SEC registered security, and that would take it from a illegal by default posture to legal by default posture. And if people want to stay in the safe zone, they can do so. But it would remove the enforcement sort of aspect, the overhang, the sort of Damocles from the industry. So you can either go down the make the Reg D sort of registration process viable and easy to do for these tokens, and have some like grace period, immunity where you're launching something new and it has to become sufficiently decentralized within X years or something. Or you can go the other way of just saying, you know what, you don't have to register at the SEC at all. You can sell to U.S. customers, but you just can't go on SEC licensed exchanges until you register at the SEC and follow all their reporting requirements.
we should do like a separate episode debate ICOs. Should they what regulatory framework should they fall under, if any, or like how should you think about registering it?
I'd be happy to nerd out with that.
That'd be
that for a
fun.
while.
Well, it
But
is kind of trending on crypto Twitters that ICOs are going to come back, like it would be good to have a nice debate. I'm wondering who else we could
Everything
panel.
back at Tron. ICOs are the 90s headbands of like the 2020s. So yeah.
90s headbands. I love it.
hey, if we can recycle FUD about like China banning ETH, I want to recycle ICOs. They can make a comeback. It's like my baggy pants from the 90s. It's cool. It's cool again, guys.
All right, I'm gonna keep moving down the list. I got family photos in 50 minutes, and if I'm late getting to that, I'll never hear the end of it. Let's see here. We got user Harog discusses his move to signal for an increased gas limit, and user Austin ST questions the extra date we need to make the right call regarding gas limit changes. Let me adjust something real quick. I just noticed my head's all cut off on this screen. Boy, it's all screwed up. All right. User Harog. Harog's on our top 10, I believe, on the Doots list. And they just had a triple kill daily due day. It was 2 days ago, I think. So Harag is a legendary account. Duder138. Many thanks to user Elixir_Knight for initiating the discussion about increasing the block gas limit here, and everyone contributing to the discussion. There's a link. I had my reservations due to the Pectra hard fork with a blob increase and not yet approved call data repricing, which is in EIP 7623. Last 30 in the All Cores development call, there was a clear vote to include EIP 7623 into Pectra. With this in mind, I thought about it again and also read the recent ETH research post about the block arrival times and available bandwidths. And there are more links to click through. Both of them focus on the blob number increase, and there are some subtle nuances which makes it a bit different for block size increases. Nevertheless, they both agree that the network can safely handle the suggested blob size increase, and I do not see from the data that the network would have issues with an additional minimum gas limit increase. If we see the network slowly getting into trouble with the slowly increasing block sizes, it is pretty simple to reduce the max gas limit again. Therefore, I set my nodes to broadcast a suggested gas limit of 60 million instead of the current 30 million. The instructions for it can be found on pumpthegas.org. Geez, let me guess, is that a Hani Abu site? Depending on your setup and client choices you have, you need to do the settings in the execution. Let's open up that site, by the way. There it is. Cool. Pumpthegas.org. Okay, I really hope we will get an improvement here as the UX for changing this number is far from optimal. Looking forward to more validators doing this, and we will get a slowly increasing block size. And then user Austin ST, freaking ultra marathon runner, Duder number 72 response. I'm really glad that the call for better analysis of bandwidth overhead was answered. I feel pretty good moving ahead with the 6 to 9 blob increase. I really hope now that we have better systems in place for monitoring available bandwidth, that we continue to keep an eye on those metrics. Does the move 6 of 9 play out as expected? Does the available bandwidth decrease by the expected amounts? We'll be looking at more changes to the blob count in the future. So we need to get a good understanding of the actual effect this change has. I can understand the reasoning for increasing the gas limit, particularly contingent on inclusion of 7623. And if we decided that there is a bandwidth to spare, it makes sense that some of that should go to the L1 rather than all being allocated to blobs. I feel less certain about the effect it will have on home staking operations. Presumably, bandwidth is the limiting factor for most people. And from that perspective, increasing, even doubling block size isn't too impactful on bandwidth usage compared to adding on a bunch more blobs. But increased block size has a potential effects just beyond bandwidth, CPU load, SSD speed, and space from increased state growth could all be limiting factors for some people's setups. Would there be an effect on RAM too? I'm not sure. How much overhead do home stakers have on each of these metrics before they'd be forced to upgrade? Fortunately, these are easier upgrades to make, whereas my pay upload speed is heavily throttled, and I'm already paying for the best internet plan I can buy. There's the can of worms about what the cost to operate the validator should be. But assuming we could all agree on that, it still takes work to figure out the correlation between block size and cost. Do we have data on this? For an X increase in average block size, is there an effect on block import time in a way that could affect attestation effectiveness? Which CPUs and SSDs become non-viable? And how does this affect the minimum cost to run a validator? Or maybe the answer is that bandwidth is the only limiting factor, and there are zero other problems. That would be great, but do we know that's the case? I'm happy to support a blob increase with the data now to support it, but I feel like I need to be convinced that the gas limit increase is also justified, and I just haven't seen that yet. That's Austin ST and Harog duking it out on Ethfinance. Two legends, great contributors. Thanks so much. Okay, Bergman Scasey. I'm just going to say it that way. Bergman Scasey. You're double weekly dooted, Bergman Scasey. Great job. Relative newcomer to the Doots list as well, explains a potential security issue if we up the gas limit immediately, and user Lops21 covers clients upping the gas limit to a safe level. Bergman Scasey says, apparently there is a problem if the chain goes to 60 million gas right now, which was reported by Marek Morozinski from Neithermind, where all clients wouldn't handle large adversarially crafted payloads. Wow, these words mean things. A 20% bump to 36 million is considered safe. Devs are actively working on a fix for it. There's 2 links to x.com. In case you haven't heard, the first one says, in case you haven't heard, there's an actual security problem. Okay, and the next one says, clients will communicate this clearly and openly in the coming days. In short, worst case, uncompressed block with a gas limit of about 42 million gas would not be importable by any client. Worst case scenario leads to a full liveness attack on the network. Holy crap, don't do that. User Lops21 responds on Reddit. Let's look up the Lops21 score as a duder number 8. Neithermind and Aragon are increasing default gas limit to 36 million, and there is a jethub.com link, and Besu will be doing so soon, according to x.com. All right. Very good. Good reporting, y'all. User Turkey Troll making it on the weekly updates us on his pivot into working in Web3. Hey, all. I just thought I'd give you all an update with where I'm at regarding Web3 employment after DevCon. As some of you may know, I've been involved with some smaller part-time projects lately, primarily in the grants ecosystem. These have included scouting out grant opportunities for ETHStaker, getting some funding to finish off and polish the EV Mavs project, Rocket School, and I also did some grant work a few months back with a New Zealand-based startup, which the founders ended up putting on hold. Then at DevCon, having chatted with a few people in the grants ecosystem, I had an idea to create a website that displayed a comprehensive list of ecosystem grants with a brief synopsis of who they're for, criteria, funds available, etc., since everyone I talked to at that point thought it was a good idea and was unaware of any existing platforms doing this. After 2 days of planning on how to execute on this, in literally the closing hours of DevCon, I met someone who already had done this and 10 times better than I've been able to do it. It was a bit demoralizing after planning so much for my own project, but they gave me some people to contact to see if they're looking for to hire. And since then, I've been in discussions with people. So in the spirit of promoting a genuinely useful public good, I can't believe almost nobody I talked to knew existed. If you're interested in finding a grant to fund your project, check out the Karma Gap funding map. Let's open up that in a new tab here for a comprehensive list of grants with filter and search tools. Or if you would prefer an AI tool to simply identify what might best suit you, try ecosystem.vision. Okay, and Treebeard on Discord is saying, yeah, there's a few. Gap.Karma HQ, XYZ. Let me copy this link and open this up in a tab as well. He says that's the best one he's come across. So we're going to start with Karma. Yeah, okay, there's a link right here. This was also what Tricky just said. Okay, thanks. Now I'm following. So, for instance, here's Green Pill. Okay, let me share the screen properly. Here's Green Pill, Q2, SCI Creator Fund, Octant, Epoch 6. Regen, Citizens, Genesis, Land Regenerator, so on and so forth. Here's another one, Explore Ecosystem Grants. This is looks like part of an AI tool. Okay, and you can apply directly on these sites. Wow, these are really clean, aren't they? Look how it looks pretty good. So there you go. If you're interested in finding out more, check out those links from dailydoots.com. I'm going to keep going. Also, shout out to Karma Gap for creating a really cool framework for grantee reputation and tracking with the grantee accountability protocol, or GAP. Not the clothing outlet, which is aiming to create a standard across grant programs, which allows grantors and donors to see how previous funding has facilitated grantee project development. This will be a key stepping stone going forwards to improving the grants ecosystem so that we're utilizing our funding as efficiently as possible. I will be writing more on this soon as a follow-up to Logri the Bard's piece on Web3 crowdfunding, which is available on Reddit. There's a link here. It has 73 upvotes. In the meantime, I have decided to continue setting up my own website and service, which will aim to raise awareness of grant opportunities through various means, and also offer grant consulting and grant writing services to those who need help. So I look forward to announcing something to everyone here soon. Finally, I have also signed on to a local startup in the blockchain supply chain tracking space who have some promising partnerships for their app built on Base. This is a part-time role, and I will be sharing more details on this in tomorrow's daily. But be aware that this is effectively sponsored content. Regardless, I'm excited to share it as they are going for an interesting combo of very serious business-facing, real-world use case and new-age memery to generate a consumer user base beyond their business-to-business tool. Plus, it'll be my first official Web3 role on an ongoing basis. Well, good for you, Tricky Troll, world traveler extraordinaire, for everything you're trying to do. You're out there hustling, man. Not only that, you've been making our Doots and making this podcast possible for a long time. You will most certainly find employment. Okay. User Aiden Cairo takes over the daily DevCon watch along from Superfizz. Okay, so this is cool. Let's see here. View on Reddit. Aiden Cairo sounds like a new name. Duder number 6, diving in. Superfizz started a thing where it's like one DevCon video per day for the ongoing amount of talks. I can't remember how many it was. Hold on, my wife's calling me. Okay, I got to move on. Daily DevCon video number 8. It's Monday, December 9th, 2024, day 8 of our DevCon listen along. The transcript proposed redesign of the Ethereum consensus layer called the Beam Chain, aiming to incorporate, we covered this earlier. The discussion questions, how does the presenter address the risks associated with deploying multiple changes at once in the Beam Chain proposal? And number 2, what considerations are made in the protocol regarding the choice of ZK-VM for the Beam Chain? And how does this affect decentralization and flexibility within the Ethereum ecosystem? So your mission is to consume the content, then comment with insight in this thread and vote up other valuable comments. The primary goal here is community development through education. And there's links. It's got links to all of the DevCon recaps from the previous day. It's kind of, you can navigate it similar to the Daily Doots navigator, right? So here's yesterday's discussion, and then you can open that up and so on and so forth and keep moving backwards in time. What a great initiative by Superfizz. Thanks so much for doing that. It's really cool. All right, Sleety Whistle, user Sleety Whistle. Oh, yes, I remember. This is a Duder number 1. A Duder number 1 showed up in our daily. I think I mentioned them on Twitter or on X, and I asked them to come bring it over to Ethfinance, and they did. So user Sleety Whistle. Hi, I'm Sleety, a longtime lurker here. I create educational animations around Ethereum and DeFi. I just posted the most recent tweet thread, which is a high-level overview of ERC20 tokens, looking into some alternative platforms for future animations, and Twitter X is too gated for my liking. Anyway, here's the thread. It's so clean and precise. I don't know if you guys saw this, but it's a whole tweet thread of animations, and it looks like a kind of 8-bit Nintendo style, for lack of a better way to explain it. So they're just cool. It looks like an old Apple II GS or whatever. But it's a whole thing. It's a whole thread. Explains ERC20. It shows all these cool little animations. So Sleety Whistle, thank you so much for producing these. It's definitely great eye candy. We got 2 more left. Usic Epic Trader fights some FUD spread by a bankless episode guest. Oh, boy. Oh, man. Epic Trader is a duder number 7, but I feel like they've been around for a long time. Epic Trader writes, so after looking over his article, it seems he's just being dramatic to garner views and make a name for himself. Or maybe it's because he's invested in other projects too and is talking his bags. Here's the main points from the article. Ethereum is under increasing competition from all sides, and BTC is better money than ETH. Epic Trader responds, no, it's not. From the article, Solana is a more performant smart contract platform. Epic Trader replies, no, it's not. Celestia is a more performant roll-up platform. I honestly don't know if this is true or not. We need to acknowledge the following trends, the writer writes. L1, new asset issuance and activity is leaving Ethereum L1 for alt L1 such as Solana and L2 such as Unichain. The desire to keep apps on the L1 is unclear, as is the L1 scaling roadmap consequently. Okay, the reply from Epic Trader. There really isn't any clear tendency that anyone is leaving Ethereum for any other ecosystem. There's no decline in transactions per seconds, users, total value locked, or apps or anything to indicate this is true. Creating an L2 on Ethereum is not an indication of leaving Ethereum. It's literally the opposite. The roadmap is perfectly clear. We're scaling Ethereum by creating bandwidth for L2s, and we're working towards removing the fragmentation. The writer on Bankless continues, L2. Ethereum L2s are highly fragmented. A single chain operated by a public company, for instance, Base, is currently set to dominate the field. Epic Trader responds, switching to alternative L1s causes even more fragmentation. Again, L2s will not continue to be siloed, so this is a temporary obstacle. But bridging to an L2 is a 100x better experience than bridging to another L1. Also, it is way too early to propose that Base is going to be the L2 winner, or that there isn't room for hundreds of L2s. The writer continues, ETH. There is ongoing disagreement over ETH's role. Is it money? Is it value capture? Do we need to scale the L1 for value capture and importance? Should we care about ETH's value capture and price amidst relative underperformance over the past couple years? Epic Trader responds, there's really not any meaningful disagreement about this within the community. Everyone mostly agrees ETH is money. It's literally the native currency of Ethereum. This shit is so dumb. Also, ETH is up against BTC over the last 4 years. So in spite of BTC having its moment, we've actually been performing better since the last cycle. Way to go. Those are great responses. And finally, to round out for this week, user Benito2030 starts a discussion about the community members with more divisive rhetoric. Benito2030 is a Duder 155, top 10 Duder here. I really like that there are ETH community members that really start pushing the ecosystem and Ethereum Foundation and researchers out of the comfort zone. And just to be clear, this is not about Max Resnick, though he might have played a part in that. And as stated yesterday, think this was a net positive, but it's still good he's gone. But there are more people like John Charb, Kane Warwick, Eric Connor, Konstantin Lomashuk, etc. They all have different approaches, but I think they really want to improve Ethereum, especially after listening to one of the latest Bankless episodes with John Charb and Mike Ippolito. I have to change my opinion about him. I don't agree with everything he is saying, but I also think that with more context, his thoughts aren't just so far off. Just one example. First, he says, quote, we, the layer one, have to complete with Solana execution, unquote, which I think is likely wrong. But later he says, quote, we don't have to copy Solana, but we need 60 million gas, cut block times from 12 to 8, and later to 4 seconds. This is something I can get behind. mostly because I believe we have to because of the path of dependency, as in we shouldn't risk to be right long term, but lose on the short term and become Cosmos 2.0, both in a design but also economic and relevance sense. I think this three fronts wartime, peacetime meta is spot on and likely needs more pragmatism, which is even more fascinating since some years ago, the ETH people were the pragmatic ones. Remember the Vitalik Convex blog? But apparently, with each new generation, this changes, at least on a relative basis. Great job, Benito 2030, rounding out for this week's Doots. All right, well, thanks for subbing and smashing the bells around here. Stick around after the live stream because we continue the party in the hotel lobby on Discord for a bonus hour of popcorn. It's a great place to let loose when the parents aren't watching on YouTube. Hi, Mom. On behalf of Ethfinance and now our Ethereum and the EV Mavericks DAO, my name is JT. Cheers and big hugs from Kansas City.